Sheth, Head Institutional Research at HDFC Securities, is with us in the studio to talk about all of that and more. So let's go straight to him. Hi Dipen, morning.
Morning.
Earnings season has not gotten off to the best start, but how have you read into it?
So the numbers are actually all over the place, and so the good, the bad, the ugly, you can see them all. But the bigger thing that I would want to say is that you're not going to look at this earnings season as some kind of barometer to tell you where to drive and how to drive in this market. It's been that way for the last one or two earnings seasons, and I think it'll be that way for maybe another one at least, if not more. The broader thesis of climate change should not get overshadowed by the weather. Let's look at it that way.
Okay.
So you're saying the long-term upside is still intact for the market?
It's absolutely intact. In fact, so there's news flow all over the place, and if you look at the news headlines, media headlines are worried about the Bihar election outcome. We are slicing and dicing the results season right now, as it were, and with some agonizing, with some justification, I can say that we are agonizing over the NPA problems, as for example yesterday with Axis Bank, and now more with some of the PSU guys and so on. And I don't think that's unfair. But the larger thing is going to sound like a stuck record here. And I've been saying it for a year and maybe even a bit more than that, that we are in the throes of remarkable healing, something that happens once in maybe 2, 3, 5 decades. So all this is old stuff. I'm just repeating what I've said earlier. You've got a right of center government, you've got improving governance. You've jumped 12 places. Now let's look at that part of the news. You've jumped 12 places on the ease of doing business in the World Bank's database. And even that is based on assessments made out of 2 large metros in the country and not the rest of the country. So there are clearly things that are changing here. The 2 big weaknesses you've had, and again this is old hat, is your excessive reliance on imported and costly fuel and your poor governance mix. So the fuel bit has happened, the governance bit is happening now. I'm not looking at company numbers so closely anymore. I'm meeting governments, I'm meeting bureaucrats, I'm trying to understand how GST will work out. I'm trying to figure out how SEB or DISCOM dues will get cleared up. So the person to research is Piyush Goyal, for example.
Okay, not to throw cold water on your enthusiasm, but the previous year's global ranking has gotten revised. So we have been moved up to 130, so we actually moved 4 points. But the point is the direction is 4. Direction is up.
The direction is up after 4 or 5 years, or I don't know how many, 12 years.
I mean, I just put the facts into perspective.
Right,
I was not disputing the fact that the direction has changed. But Dipen, we have to talk stocks. And there, you know, the point is the reality on the ground is not changing.
Yes.
Is not changing with ferocity, is not changing at all in some cases, like in the case of Axis. One had got the impression that some people have been smarter in dealing with lousy assets. We didn't get confirmation of that when the results came in. So what would you do with Axis right now?
So we were, as analysts, we were very clear that Axis does have exposure to stressed sectors. A whole lot of banks do. It's a question of which bank is mature to accept, admit, recognize, classify, and then provide for. If you're going to award marks for these virtues, then I think Axis comes out tops.
Okay.
So is there pain? Yes, there is. Is there lots of pain? Well, they took it on the chest or the chin or whatever you want to call it yesterday or the day before. But look at this bank. When they had extraordinary or non-recurring profits coming from overseas or treasury activities and so on, they created a contingency reserve. They're using that headroom to absorb 3/4 of a large asset, lumpy, delinquency that happened in a quarter. I think they're behaving like extremely responsible bankers.
Are you buying it right away or would you wait to buy it?
So can you time these things? You tell me. It was down 7% yesterday. We haven't changed our stance. We are buyers here. It sounds completely counterintuitive. But like I said, the weather's bad. The climate is going to improve from here. I mean, look at the virtues of the bank. They're still, so in their peer set, they are at 78% PCR, which is probably the highest. Their domestic NIMs are strong at 4% plus. Loan growth is over 2x industry. I mean, and valuations have now fallen to less than 2x F17 adjusted book value. And I'm giving you consensus numbers. I'm not even giving you mine. So what's wrong here? All that is wrong is known and is baked into the numbers which have been reported, and all that can go right is what you will play for now.
But would you worry about the fact that, Axis has reported higher stressed assets addition, so that could perhaps translate or could be reflective of what other private banks are going through?
Of course.
So would you worry that there could be further downsides in names like ICICI, etc., and would you use that as an opportunity to buy?
So with ICICI Bank, let me tell you that the relative, what should I say, intensity of exposure to these sectors is probably higher at ICICI Bank. Our slicing and dicing tells us that maybe there are maybe there are more virtues to back at Axis at this point of time. But it doesn't take away anything from the fact that ICICI Bank has also got a great retail franchise. It's got a very strong NIMs, very strong return ratios, very well capitalized, no risk of dilution. There's a context in which you have to love or hate these banks.
No, the intensity of exposure to stressed assets is discounted by the market to the extent that year to date, ICICI is down 24%, Axis is down 4%.
And headline valuations are also 15-20% lower.
Okay, so are you a buyer on both?
So we've got big positions, big overweight positions on both of them in our model portfolio, which is underperforming, and we are not rattled. Okay. Which is underperforming relative to where it was, let's say, 9 or 10 or 12 months ago.
I'll tell you, Axis has about 8% of its total book exposed to the stressed groups,
sectors,
over-leveraged groups, companies, and all those are still standard in the books of Axis. So, Axis said that they will do 5,700 in terms of stressed assets incremental. In the first half, they've already done 5,000. So chances are they will increase.
Absolutely.
Therefore, I'm asking you, should you buy right away, or will the market still discount that there could be further NPL recognition or stress recognition in some fashion, 525 or some other fashion? Therefore, would there be a more attractive space to buy?
So frankly, I do not have access to Axis's loan books, and I can't look at every single, let's say, SMA2 account that they are sitting on right now. I don't have it for ICICI Bank. I don't have it for Yes Bank. You can name them all, and I will say I don't have access to this information. But the fact is that if you're going to bet on the longer term trajectory of corporate health in this country improving over 2 years, then you should actually be doing an SIP in these guys.
Okay.
They're great banks. And
what about cement? Again, Ambuja disappointed,
yes.
And the stock is, I think, down about 2 percentage points today. Would that be an opportunity to buy Ambuja?
No, we have a sell on them. We don't think that core profitability, asset allocation, and location mix is as much in favor of, or even product mix for that matter, and their well-known clinker cement mismatch, so to say, which will not, just vanish in a quarter. So and most of all capital allocation. So we don't think they're worth buying at this point of time on that ground. On the other hand, does it mean we are bearish on cement? No, but we do find the $180 to $200 kind of valuation across large cap cement to be a little discomforting. So we love the mid cap guys, and I've been harking about Sanghi. I don't know, I've been talking about Sanghi since what, 30-35 rupees on your channel. It's double from that level. Orient, we are still convinced on. Mangalam, a small little company where valuations are very, very low. Okay. If only they would get their profits right in a few quarters. And so many cement companies are right now operating at 70-75% capacity utilization. In a capital intensive industry, if you're not going to do capex for 2 years, somewhere the cycle is going to come back and help you make money.
Okay, another stock that you've picked out for us is Cholamandalam Finance. That one had a great set of numbers this time, 22% top line, 27% bottom line. But what's the story here on?
So Sonia, you have to look at it like this. NBFCs are facing a little bit of tightening of screws on the regulatory front from the RBI. I'm not, so if you ask me for a personal opinion, I don't think that the move to 90 DPD, delinquency recognition is entirely fair and should apply to all NBFCs straight away and so on. So they've been given a window to do this. These guys are 6 quarters ahead of schedule. They are at 120 days already. And so again, look at the prudence. What I love in lenders is the way they will be prudent. And here is a lender who is at how they define, and I love this definition of theirs, that they are at the top of the bottom of the pyramid. When they so it sounds like a smart, catchy ad line, but the fact is very true. They are lending to the small road transport operators who are between the semi-urban and the completely rural geographies. That's about 2/3 of their business. So whether it's LCVs, MCVs and so on. And of course they have a very nice, so roughly 1/3 of their loan book is the LAP book, or what they call home equity. So that has kind of kept them in good stead while this part went through a cyclical downturn. Now both businesses are steady. If you look at, the last quarter's disbursements, and that for me is the on the ground indicator. for how the business is going, and that's at a 12-quarter high, the disbursements growth. So that tells me these guys are revving up. Okay. And that cyclical, tailwind which is going to help them on the CV book, their steady home equity book. So valuations are high and they'll continue to be high. We really love this company, if you ask me.
Fair point. And they got a payment bank license as well.
And they've got a payment bank license. Valuations are 2.5. We'll give them 3 times or whatever. And again, in 6 months' time, I'll roll them forward or something. And then again, you'll find them attractive for another 20-30% trade. So with these guys, you just stick it out for the long term.
Well, in the large mid-cap space, any other stock that caught your eye because of its earnings performance? Anything that you have added to your portfolio or likely to?
So we actually added ICICI Bank. So so I don't know. Are you specifically talking about large caps?
No, I asked you about mid caps, but really, if ICICI is what you've added, fine. Anything else in the mid cap space?
So I think that all that could have gone wrong in terms of asset quality, and again, this is an asset quality story with a lot of embedded operating leverage, a lot of intrinsic capability, which unfortunately we haven't seen so far. So we have the right to crib a little bit. But if you maintain the faith, I think Federal Bank is available at a very good valuation. Again, not a new idea. They've gone through a little bit of a stutter or a stumble this quarter, and our interactions with the top management there indicate that they clearly recognize it's time to buck up and deliver. And I think if you can't buy Federal Bank at this price, you probably may not get it at this price again. And so that's again a call of faith, a leap of faith that you will have to take. The recent pain on asset quality notwithstanding, valuations are again extremely in favor.
Okay, by the way, the markets are falling a bit, so just take note of that. The Sensex is down about 80 odd points and the Nifty has moved below the 8150 level. So not a great start to the morning trade. Bank Nifty also under pressure. Wanted to just ask you about Lupin and your view on that, because, there's been a considerable fall post the numbers, but it's similar to what we saw last quarter, and then the stock rebounded quite a bit.
Right, so we dropped them from our model a few days ago. Okay. There are 2 reasons for that. One, the tilt towards domestic cyclicals necessitated the need for generating cash out of some of our, pharma and FMCG holdings and so on. The second thing is that we really don't have active coverage on them anymore, so I think it's a little unfair to comment.
Fair point. Deepan, we leave it at that. Thank you very much for joining us with your climatic perspective as well as the weather of the day. Thank you very much for joining.